Before we get into it, a quick word about something we've built at Tearsheet. If you're a senior product leader at a bank or fintech, you know how hard it is to find peers who actually get what you're dealing with. Not vendors, not consultants, people doing the same job at the same level who can tell you what's really working. That's why we built the Tearsheet Product Leaders Council, a peer network of heads of product from across banking and fintech. Major banks, fast-growing fintechs, the companies reshaping how financial products get built. We meet regularly, we go deep, and everything stays off the record. If that sounds like something you've been missing, go to library.tearsheet.co/council to learn more. Welcome to the Tearsheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller. Small business banking has always had a structural problem. The companies that hold your money and the companies that build your financial software have been two different things. One moves the money, the other tracks it, and small business owners are stuck in the gap between them. A new generation of fintechs has been trying to fix that, but most are still building horizontal tools for every business everywhere. A more interesting bet is vertical, going deep into the specific workflows of a particular industry and automating them completely. My guest today is Victor Cardenas, co-founder and CEO of Slash, a business banking platform that started with teenage sneaker resellers and has grown into a $1.4 billion company by doing exactly that, building industry-specific financial products that legacy banks will never prioritize. Slash processes nearly $3 billion in stablecoin payment volume annually, and the company has been doing serious work rethinking how AI fits into both how they operate internally and what their customers experience. Victor, welcome to the show.
Zach, thank you so much for having me.
So we've covered a lot on this program about SMB finance. We've had guests that are approaching it from the ledger side. We have guests that are approaching it from the accounting side. It seems to be a lot like a renaissance of work that's happened over the past few years. We've actually called it that, but it still feels like there's a huge opportunity. Small businesses still don't get the help that they need in terms of finance. Do you think there's a structural failure in how the industry has approached SMB finance up until now?
I think for the longest time, there were two categories of companies that operate in the SMB finance space. There's companies that actually bank and move money on behalf of SMBs and lend to them. And then there's companies that build financial software for SMBs.
Mm-hmm.
And we're of the opinion that these actually should not be two kinds of companies. It's actually quite beneficial that the company that banks you and that has read and write access to your money is building all of the software that allows you as a small business owner to stay organized. So I think
this is the convergence we've seen over the past few years with embedded finance too.
Exactly.
Yeah.
Where you have financial software companies that are starting to build on top of these embedded finance platforms to offer banking services to their end customers. But our philosophy at Slash has always been the bank account. The bank account is at the financial heart of an SMB's finances. And so all the software we've built is really around it. And we're of the opinion that financial services platforms and financial software platforms should really only be one and the same. And
why is it important to provide your service at the level of the account?
Well, it comes down to having read and write access to your customers. Three things really, their transaction data. You can send transfers on their behalf. And then you can issue cards on their behalf as well. So your product is much more powerful if you are not only ingesting data and feeding it to some other system, but if you can act on the data that you are reading and perform an action on behalf of the customer, for example, send out a payment. So you may want to, if you are your customer's business banking platform and their bank balance in your particular account is running low, and you can see that they have money in some other bank account, then you can initiate a pull transaction there. Where if you're this platform that only provides software that helps them with treasury management, the only thing you can actually do is notify the end customer. So actually being able to touch the money and build workflow automations that not only remind you or sync data from one place to another, we found has been massively differentiating for us.
Makes a lot of sense. And you guys have taken a vertical approach, right? Can you explain how you've approached rolling out, I guess, specific tooling to different verticals?
Yeah. Very core to the Slash thesis is this idea that business owners deserve banking products tailored to the needs of their specific industries. What an accountant at a construction company does all day, or a finance professional, or a small business owner does, it looks very different from what an accountant or finance professional entrepreneur does at a marketing agency. They're reconciling against different systems of record. They care about vastly different things. And historically, legacy banks have sold, and even fintechs that came before us, one size fits all products to all these end customers. The Slash strategy has been about, let's find one particular vertical and then let's automate every possible finance task associated with it. And so I'll give you an example I talk about frequently. One of our largest verticals are performance marketing agencies. So businesses that run ads on behalf of other direct-to-consumer e-commerce brands. And the status quo before Slash comes along is, I'm a marketing agency. I have 20 different customers. And at the beginning of every month, customer 1 sends me $100,000 prepayments for the ads that they want me to buy on their behalf. Customer 2 sends me 50. Customer 3 sends me 150. Customer 4 sends me 200, etc. Suddenly, I have $9 million sitting in my Chase account, and nothing in my Chase account tells me what of that belongs to each one of my end customers. So I need to have an on-payroll person essentially tracking every inflow on a per customer basis, which are the incoming wires, and every outflow, which is the spend on card. And it gets very messy very fast. You're very high velocity businesses. So what we built is this product that lets these agencies create a distinct virtual account or sub accounts for each one of their end customers, give the end customer visibility into how much of their prepayments is left and where it's been spent, and automatically charge their agency fee as ad spend is spent down. So their business model is, I've spent ads on your behalf, I charge 5%. We notice that and transfer from their sub account to the primary account right away. And so this is an accounts receivable product or a financial workflow that is only really relevant for this one particular niche. But the fact that we were able to tailor our offering and provide not only everything that a traditional bank offers, but this value-added service on top, has allowed us to sell quite aggressively into this market. And so the same dynamic exists in a lot of other markets. We're integrated into long-tail types of ERP software that allow our customers to reconcile their financial transactions against some system that's not QuickBooks, NetSuite, or Xero, the big ERPs, and we've plugged into payment methods that are only really relevant for a small subset of customers. For example, we let our customers send and receive USDC and USDT from their business banking platform, which is something that basically no other business banking platform allows you to do. And that's been massively differentiating for import-export businesses, for example, that have to pay suppliers abroad. And so that's really been the Slash thesis, that we can win a lot of business if we focus on what makes an industry unique and catering to those specific problems.
So would the model be that you have, I guess, a huge library of different industries that you service with those workflows pre-built?
Yeah, that's...
Or do you focus just on the ones that you're on there now? Like where do you decide to how wide to build?
So I would say that the Slash product is valuable for any kind of business owner in America. It's and in Tearsheet, Zach, you guys don't have an account with us, but if I were pitching you,
we're a small business. Yeah, we need help.
Exactly. There's three reasons you should sign up for Slash. The first is phenomenal rewards, 2% cashback on your card spend, and 3.82% yield if you keep over $500,000 in a treasury account with us. So great rates, the Costco of business banking. The second is we try to bring the feel of a community bank to fintech. So 99% of the revenue that we generate is from an account that is managed, by a human that works at Slash. So that's the second. And then the third is we just have an extremely simple user interface, and we centralize a lot of the financial software that you have to consume. So if you use Slash, you don't have to buy an invoicing product from somewhere else, or an expense management product from somewhere else, or a bill pay product from somewhere else, or a reimbursements product from somewhere else. All these financial workflows live inside of Slash. And so that's my pitch to and run-of-the-mill SMB, anyone that comes to us, I tell them those are the 3 things you should do. But on top of that, if I'm talking to a business, let's say a marketing agency or an import-export business, like I mentioned before, I really double click on like those features that are most relevant to them. And so the way the product actually looks like, it's not like you pick and choose. It's not like we have like this library of features and you're like, hey, I want this. It's that every customer has access to every feature, but not every kind of customer will use every feature, right? You sign up for a Slash account, and unless you're making some payments in USDC to a vendor in, I don't know, some designer abroad, like most likely you won't use our stablecoin payment product. So I like to think of it as this big house and has lots of rooms. And not every single person that lives in that house goes to every room. They only go to the one that's relevant for them.
Got it. I want to switch gears a little bit and talk about AI. It is an important topic, particularly for the incumbent financial industry. A lot of our community members are really grappling with like what role AI is going to play in their current business and the future business, its impact on their team structure, skills they're hiring for, as well as impact, obviously, the end product where it touches the customer. How do you guys view AI and how do you use it?
Yeah. Look, one interesting thing is from January of this year, we've been spending around 50% of our engineering hours building internal tools to maximize company productivity instead of external product for our end customers, because the pace at which actually AI native organizations can innovate is so different to the pace at which pre-AI companies can innovate that we've just been obsessing over how can we rethink the way our organization does work. And I'd say the most impactful initiative we've embarked on and we've been very successful at is building what I like to call our company brain. We launched this AI agent internally. We call it Twin. And it is this all-knowing being that has perfect real-time context on literally everything to do with Slash. And it's collaborative. So people access it within Slack. It's this agent that's hooked up to our company's database, to our Datadog, which is our logging system. It's hooked up to our code base, so it knows who shipped what product and when. It can read all prior Slack conversations, so it has context over what different teams are working on, Notion. And so it's made onboarding, for example, new employees, drastically faster. Everyone wants to get context around how a particular part of the Slash product works, and they don't have to ask and find the person that has the perfect context and ask them. They can just message this agent, and this agent will tell them in perfect detail everything there is to know about the company. So I would say that in AI, there have been a few products that have gained true product market fit over the years. The first was just a chat interface, ChatGPT. Everyone likes ChatGPT. I think coding agents were another really big one. So these agents that go out and build software on your behalf. And then number 3, I think right now we're seeing this new SKU, which is this company brain. It's this collaborative oracle that can surface perfect context over all your organization's flows to your team. And so what I would say is if you're a company in the later stages, definitely try to think about how you can repurpose everyone at your organization's time whose job it is to bridge communication gaps between different teams into doing actual individual contributor work. Now AI can actually act as that sorry about that.
Bless you.
It can actually bridge that communication gap between every single person on your team. And so we obsess over every single person at our organization producing a valuable unit of work every hour that they are here. And what I mean by a valuable unit of work, that means being on a customer call, taking out a customer to lunch, writing code, writing a product spec. These are things that are actually getting revenue for our business or improving our product. Nobody should be doing merely managerial tasks or bridging communication gaps, because AI is not phenomenal at that.
Got it. And so what would it take for you, Victor, then to start embedding AI where it touches a customer? Like how far along that journey are you guys?
Yeah, so we have a product. So this Agent Twin, we launched a simple version of it to our customers. And with only one integration, which is Slash. So they can't connect their database and their code base and do all the stuff that we can do with it, but they can connect their Slash account. So every single action they can take via the Slash dashboard, they can take in natural language, right? So they can message the agent and be like, hey, I just hired this new employee, Zach Miller. Issue him a card. Here's his email. Boom. And then it just issues the card.
I want the chief marketing job, by the way. Yeah.
Please. Or what are my current transfers that my finance team has queued up for approval? And then it lists them and say, okay, approve these 3. And then it approves them. So in the same way that there was this big shift from branch, in-person banking to online banking, and then from online banking to mobile banking, I think we're going to move from mobile banking to agentic banking, where it's important that you as a financial institution or fintech company make it possible for your customers to take action on your product via text, as if they were texting a private banker of theirs, not just by logging into a click and drag UI.
Got it. Just a question, I guess, off that I thought of as we were talking here. We've also seen some fintechs apply for bank charters. Do you imagine at some point, like you talked about having access to the bank account, at some point it would make sense for you to actually own the whole stack?
I think so. Look, but not in the immediate future. There's 2 ways you can really innovate in fintech. You can innovate up, right? Which is you add and you ship more product that is that enables the customer to do something that they could not do with a legacy financial institution, or you innovate down, right? Which is you own the stack, you get regulatorily creative, and you can do business in ways that other financial institutions could before, or you could onboard kinds of customers that perhaps they're uncomfortable.
That'd be like regulatory innovation in a way.
Exactly, that's like regulatory innovation, and we're really focused on like product innovation right now. And there, it's so competitive right now, the B2B fintech space, that if we want to be competitive, we just have to ship so much product and demonstrate to our customers that we are the most complete solution. We are the all-in-one. We are the solution that's going to save the most time and the most money. And that regulatory innovation at the bottom can come down the line. We have a great bank partners already, and Column and Lead Bank, and they've just been phenomenal to work with.
We've seen young startups that have gone on to become unicorns that started with like a foothold product, kind of got initial traction, then expanded, particularly upmarket. Like they started maybe with small businesses and then went towards enterprise. I guess, like, how is that a possibility along the way
for us to sell into the enterprise? Yeah, 100%. We have many multi-$100 million revenue businesses on Slash. And we had a similar story to the one that you described, where we had a bit of a foothold with teenage sneaker resellers. That was the market that we were first popular in. And the Slash story has been one of expanding concentrically out of that into much larger and more established niches. Or
you didn't want to stick with the sneaker market? It wasn't large enough.
Look, I love those guys. Most of them went out of business in 2022, actually, which was catastrophic to our company. No, I definitely have ambitions to build something much larger than that. When I'm trying to convince people to join Slash, I'm telling them we want to build this generation's JP Morgan, and if we want to do that, we definitely have to serve many kinds of entrepreneurs, not just one in this initial segment that we started out in.
Well, it's interesting because I use that company as an example because they also have a consumer-facing business, obviously. Do you imagine also that
company is that?
But didn't you just say JP Morgan?
JP Morgan, yes,
yeah.
Of course.
Yeah. And I'm just curious, like we've also seen like Mercury roll out recently, like, a business facing, like that also addresses maybe the entrepreneurs behind the business as well. Like, is there a consumer aspect that's tied in here too?
Not yet. At some point, yes, we will also want to launch a consumer product, just because it's important that in the same way we try to bring this community bank feel to fintech, part of that involves understanding the actual customer who is the owner operator, not just the business.
Right.
So
and they're commingled in most small businesses. It's to some level.
They're commingled, exactly. And so being able to differentiate, to distinguish between personal and business accounts is huge. Right now, it's quite easy because they only have their business with us and they have their consumer bank account somewhere else. But it is a way for us to kind of be able to grow our LTV and just monetize more of the customer relationship. But I would say similar to getting a charter, it's a little bit down the line.
Victor, I want to go back to something you said earlier. You talked about the stablecoin functionality that you've rolled out, which is somewhat unique here. Can you talk about some of the success you've had there in terms of volumes and what opportunity you see in that market? You mentioned particularly like import-export type businesses, I guess, where there's some type of foreign currency exposure.
Exactly. Look, our business processes almost $3 billion a year in stablecoin payment volume. Most of it has to do with some form of cross-border commerce. It doesn't really make sense for a U.S. business to pay another U.S. business via stablecoin because ACH and wires are good enough, and there's even real-time payment rails that exist here. But the world trades in dollars. The dollar is the world reserve currency, and increasingly there are U.S. companies that are asked by their suppliers internationally to get paid in stablecoin. So it's really two cases. It's American companies that have foreign customers that want to pay them in stablecoin instead of dollars because they don't have access to the U.S. financial system, and it's much cheaper to send a stablecoin payment than it is to send a SWIFT payment. One. And two, it's American companies that are buying goods and services from businesses abroad, and those businesses abroad tell them, "Hey, can I please get paid in stablecoin?" So it's just really important that that the traditional financial system and this new one that's being built on top of stablecoins are interoperable, and we believe that's going to happen. And we focus on a product perspective on making that possible.
One of the things I'm curious about is who you see as your competitors, because you have a pretty full suite of services. Who do you find yourself winning business from?
Bank of America, Chase, American Express, Payoneer, Capital One. Look, 95% of American businesses right now bank or spend with what I would call a legacy a bank, right? A legacy
traditional,
not traditional bank, not a fintech. And so we're starting to sell into tech companies, and when we're selling to tech companies, we mostly sell against the fintechs, but tech is a very small percent of our business right now. But by and large, we're running into Amex, we're running to Chase, we're running into Bank of America, and those are the businesses that we're most displacing. So I think especially because fintech companies are kind of the loudest, we lose sight of the fact that there are these behemoths in the room that actually control most of the market share out there. So it's really them that we're competing against.
And how are you reaching those people? I mean, what are your channels in terms of customer acquisition?
Lots of I would say it's evolved over the years, but one thing that works particularly well has been trying to maximize face-to-face interaction. So we have reps that are all over the country, and they obsess over bringing folks in different parts of the country together. And
they're meeting people in real life?
In real life,
Amazing.
man. I think
okay.
One of the places where we will not, where AI will not actually take headcount from is sales. More than ever,
people want to buy from a person.
Financial services, people want to buy from other people. People want to use a product that's provided by an organization where somebody they really like is employed. And so, even me personally, a lot of my personal time goes towards selling the largest accounts and then showing them that the CEO cares about them using the product. So I think there's something to be said about the importance of face-to-face interaction.
I also want to make sure we talk about a recent fundraising you had. I saw that you announced a $100 million round. Can you tell us a little bit about that?
Yeah. So it was a $100 million round at a $1.4 billion valuation. Ribbit Capital, Coastal Ventures, Goodwater Capital led, and then NEA and Y Combinator also participated. So NEA, it's the fourth time they've invested in Slash. Goodwater, second time they've invested in Slash. YC is also the fourth time they've invested. So what a privilege it is to see these storied investors continuing to want to invest in Slash. And it's a huge responsibility, right? It's a very flashy moment. It's an excuse for us to make a lot of noise about, hey, we're this very well capitalized entity. We're here to stay, but at the same time, it's now we have to put those dollars to work, and we have to use that to build an even bigger business. So I couldn't be more excited to come into work, and work my tail off, to make that a reality. And it's both exciting but a huge responsibility as well.
Congrats. Those are some great names around the table. I'd like to ask one last question is, what are the use of proceeds? What are you planning? How are you looking to deploy that capital?
More markets, more geographies. Like I mentioned, core to the Slosh thesis is this idea that business owners deserve banking products tailored to the needs of their specific industries. So building more product for more industries and hiring more people that know those industries very well. So just pouring fuel on the fire on our product and go-to-market strategy. And then two, we actually didn't talk a lot about this, but stablecoins make it possible for American fintech companies to offer USD banking products to businesses all over the world. So we can offer corporate cards to businesses outside of the US. We can offer an account and routing number, not quite an FDIC insured bank account, but to businesses outside of the US. And so we want to be the dominant global B2B banking platform. And yeah, man, that's the other one. Just how do we provide value to businesses outside of the US on a jurisdiction by jurisdiction basis?
Victor, it's been great talking to you. Thanks for joining us on the Tearsheet podcast.
Zach, thank you so much for having me.